Greetings, everybody. This is Jeff Scott, and this is my top-down review for August 1st, 2021. I titled today, How Many Shots Across the Bow Before This Market Turns Back? For those that don't understand that, I've not been in the military, but I've read a lot of books that are military-based, and if the Coast Guard or the Navy thinks you're getting too close or they want you to stop, they'll fire in front of you with no intention of hitting you. And if they do it enough, most people are going to stop and turn away. So the question is, how many of those shots will this market take before it turns back? Again, my name is Jeffrey Scott, and my email address is hgsidoc@gmail.com. I record this in 4K. So if you're watching on YouTube, there's a gear in the lower right-hand corner. You want to click on it and maximize your resolution. If you like this, please hit the thumbs up. If you have comments, good or bad, put them under remarks or email me. And if you don't like this, hit the thumbs down. I think, I have a very modest distribution. Let me make the right word. Miniature distribution on YouTube. I do post it on the HGSI site via my Dropbox. I think a lot of people just download it from my Dropbox. But hearing from people is always good. Kind of a lonely life doing webinars to yourself. Disclaimers, this is for educational purposes only. Anything I say should be in the spirit of education, should not be considered investment advice. If I talk about specific stocks or options, it's for education. I don't warrant anything that you purchase. I'm a doctor, not a broker. I'm independent. I pay for the tools that I use, and trading involves risk, and you alone are solely responsible for any and all investment decisions that you make. I'm not going to spend much time, but I've learned from a lot of smart people, many of which are up here. Could probably add Rob Hoffman and a few others to this as well. And my feeling is it's our own responsibility to learn how to trade. No one is going to do it for you and care about it as much as you care about yourself. If you're watching this and you want to direct your own trading, and my advice is to learn from smart people, whether it's books, live seminars, videos, whatever it is that works for you, and then put it together in a way that works for yourself. That's why I call it Be Your Own Guru. I own a lot of programs. If you come to my office during the day, I'll have TradeStation, Thinkorswim, and probably Wealth Charts open, HGSI as well, and the Q Edge tool. And then I have indicator sets from Dr. K, from Sager's Q systems, but also from John Person and a few other things I've picked up over the years. I talk about the people whose tools I use. I'm not paid if you buy something from them, and this is just education, and I'm happy to be an unpaid volunteer. I have no financial interest in the following, but here's the website for HGSI, the software, highgrowthstock.com. Under investing strategies, you'll see a lot of helpful videos by Ron Brown, myself, and others. Under free 30-day trial, it's exactly that, a free trial. Where we are in this market, broken record. Every time it feels like we're breaking down, we get a leg up. Every time it feels like we're going higher, we get a leg down. Well, last week was a leg down for me, although it's kind of interesting. Not all the stocks were down. But so it feels to me like we're going lower, but that means we're probably going to go higher. In fact, you could say we're in a trading range for the most part. We pull down and we bounce. We get up where we think we're breaking out, we pull back. So because of that, I have cash, smaller positions, I've sold premium, and my investment account has a mixture of longs and shorts in it. Those who've been following me for years know that my largest position is Amazon, which I'm in at $450 a share. In my trading account, it's by far the biggest position. I trade around it, which means I sell calls, puts, spreads, butterflies. I might buy them. And going into earnings this week, I had sold some out of the money calls and bought some puts at the money when it was 3,700. I took heat because there's premium. It's kind of like the deductible, the way I look at it, but it really buffered how much I could have lost. And I'm sort of into account protection and money management, and it just alleviates a lot of risk by having those puts on. Of course, the market could have gone up 300 points, and I would have had to buy back my calls or gave up my stock at a higher price. If you look at how Friday ended, it's not a sea of green, not exactly a sea of red, but look at what we see. We see that materials are 50-50, energy's mostly red, financials are mostly red. I'll be nice and say industrials are 50-50, staples mostly red, technology mostly green, discretionary mostly red, almost all utilities were red. Healthcare was split, as was communication and real estate. So a lot of negativity in the market. And frankly, last week for me was a challenging week. Let's take a look in Thinkorswim at the major markets. Let me pop that up here. Whoops, that's not what I wanted to pop up. Not that you can't see that. You'll notice that my total is down because I forgot that Thinkorswim is a first in, first out. So I had a put, a butterfly. I had a long put butterfly, which meant I had extra protection on my Amazon, and then I had a straight put on the Amazon. Well, the long put expired on the butterfly way in the money. So even though the short put, the whole butterfly was in the money, but instead of just doing the butterfly, closing it out, the way Thinkorswim does it is it closes out my stock first in, first out. So on Monday I'll fix that, but it looks like my positivity in my account disappeared. Well, it just went off in the selling the Amazon, but I think that's more an aberration, probably more than you need to know. But in case you wondered, that's why. Here's the market, 1 year's worth of the S&P futures. How can you be bullish on this chart? I mean, bearish on this chart. Almost a straight shot up, lots of pullbacks to the 50 and bounces. The last one of those pullbacks felt pretty bad, and it was 2 weeks ago. Then we had a reversal. This was a Monday, and this was a Tuesday. And we're back up to all-time highs. That would be the bullish reading on this. I think you could also argue that we've sort of stalled at these all-time highs and have gone sideways 1, 2, 3, 4, 5 or 6 days in a row. You could see intraday we hit an all-time high on Thursday. So I'm nervous this market. It'll come through loud and clear. But if you had to ask me, is this going higher or lower looking at this chart? It's a bullish chart. If I look at the NASDAQ futures, same story, although they've had some deeper pullbacks, cutting below the 50 multiple times up, and they haven't had the same level of ascent over the past year. However, 1, 2, 3, 4, it looks like on Monday they hit a new all-time and closing high, and then they sold off the rest of the week, closing above their 17-day moving average, well above their 50 and their 200. Again, is that a bullish or a bearish pattern? That's bullish. This market's right off all-time highs, maybe stalling. If I look at the Dow futures, let me make this the same size, boom. Again, as you'll see with the Russell, I'm putting my cursor on the high from back in May. We actually set a new high, at least I guess closing, but we just got above the high of that day back in May. You could certainly make a point that the Dow has gone kind of sideways. And, you know, after you go sideways for a long time, maybe you're going to go visit the downside or you're going to pause to refresh and go higher. I can't say what's going to happen, but we're going sideways. If I look at the Russell, this one looks different than the others. It's below the 50. And talk about a sideways market. I mean, you put the cursor right here and you go back to the first time we touched it. You basically have come down and touched this low 1, 2, 3, 4 separate occasions, and we're going back to the beginning of February. And the top, and that's a Darvis box. You sell it, you buy it. You sell and buy, sell and buy. Sideways move. Bullish or bearish? It's a sideways move. Darvis box. If we look at the VIX struggles to go higher. Every time it runs up, it runs into overhead supply and resistance. It comes back down. But I will point out it's resting up here, which is higher than it was resting before. So we'll see what the VIX does. It's also above the 17 and the 50-day. If you hear moaning and groaning, I assure you it's not me. It is my elderly dog who is mad that I'm doing this and not giving him treats. And then the dollar, partly why the Russell was the strength this week was probably the dollar weakness, and the dollar bounced on Friday. All right, so I look at that, and although you're going to hear reasons why I'm concerned, some of those shots across the bow of the market, at least looking at the major indexes, I can't say that that looks bearish. Now, I'm not going to go deep into the weeklies, but you could see the moves that we saw off the March lows across the board, even the Russell. And when you step back, you could see how the Russell and the Dow futures have pretty much gone sideways. Now, I know I've gotten a few people interested in this, and to be clear, I learned this by listening to Don Kaufman. Not everybody has the same interpretation, but think of the expected move as what it would cost to buy a call and a put at the money price, and that is a at the money straddle. And at the money straddle is what you could buy those for, and you'd have to move beyond the price of the call and the put to be profitable. So if you were selling that straddle, as long as you stayed within the expected move of the green and the red, then the person selling the option makes money. It also gives you, since the option sellers are the smartest money out there, it gives you sort of a sense of how much that market is expected to move this week. Well, first, I like to look at it not necessarily what next week looks like, but what happened this week. And I'll watch it every day because I can learn from it. Well, the first thing is, despite I had a feeling that it was a tough market, the S&P 500 futures went sideways. They opened at that gray, or they closed the prior week on the gray line, and they closed this week at the gray line. So as Kaufman has said before, massively unchanged. The NASDAQ expected move, not as good. Traded down and bounced on Tuesday and traded in this lower quadrant. Now, who won on the week? The option sellers of the straddles or the option buyers? The straddle sellers. And that's what should happen, is they should win 65, 70% of the time. And in fact, when I did some research that I've talked about the last couple of weeks, it's closer to 80% of the time we close within. How did this help me? The fact I bounced off the lower line gave me interest in going long. Nothing happened though. If we look at the Dow futures, looks like the S&P oscillated around where it closed the prior week. And again, like the S&P, closed pretty much minimally changed. The Russell, interestingly, pulled down on Tuesday and then reversed higher and traded up to the top of their expected move. And again, favoring the option sellers, closed within the expected move. The VIX did not do much. And then the dollar, which we talked about earlier, had traded down, actually got within the expected move and then sort of had that rubber band reversal on Friday. Now, I like to use this mostly on indexes, but it turns out you could see it on stocks as well. So this is Amazon, and you could see that Amazon has had a number of weeks where it traded above the expected move. Here is 2 weeks in a row. Here is 2 weeks in a row. And what do we have here? we just blasted below. So it says 33.27.59. That's the close for last week. That was a pretty big move. Now, my puts were at 3,700, and I put my puts on, I think, after there was a day it went up here when it went up to 37.73. I put it on at 3,700 as it was coming back down. And I financed those by selling things against them. That's how I like to do it. That reduces some of my risk on the cost of the puts, which frankly I hope always expire worthless. And I keep my stock, but it also puts a little risk on me. If the stock takes off, I have to buy that call back. But I use one to finance the other. What happened underneath? Rates fell this week across the board. AD lines continue to show large cap outperformance, where if you look over here, the AD line on the large caps is just below its all-time high, as is the price on the Russell 1000. You can compare that to the small caps, and you can see it's just not the same. Both the AD line and price are well below prior highs. Now look at the NYSE. You can see again, we have rolled over. We got lower highs and lower lows. So now we're in a downtrend, I guess, definition. You could see that the big cap guys, the diamonds, the Qs, and the spiders, turned down a bit but are outperforming. The Russell was the strength this week, turned up a bit, and you can see how weak transports are. Falling rates mean rising bonds, and you can see that here. Breadth was kind of mixed. We stopped falling on stocks above the 200 and stocks above the 40. On the shorter term, 3-month new high low, we eased some. So, breadth is still kind of lousy, especially when you look out here, and it's come down quite a bit, but it's kind of stable from the prior week. The daily McClellan, interestingly, the oscillator broke above the zero line on the spike up here. Summation index did not. I'm looking for extremes, no real signals here. And again, here's the weekly, looking to see if we rejected the zero line or go higher. And notice that even though we have higher highs, we're not heading up at all on the weekly summation index. The buckets, love the buckets. Buckets would be like taking every stock in the S&P 1500 and looking at where they fall in their Bollinger Bands. Are they above or below the midline? So here we have 61% above the midline. That's a bullish story. And you could see we have 2% below, 10% above, and then sort of equal distribution, but in the upper parts. That's actually kind of bullish. That kind of goes against the poor breadth markets coming down. So this would be a positive. Hindi omens, we had two, one Friday, one Monday on the NASDAQ. To be fair, the Hindenburg omen, which is folklore and not believed by the masses, but to me it signals before every major correction, 1 out of 4 being significant. It's supposed to be on the NYSE because EdgeRater can do both. I calculate on the NASDAQ. Frankly, an EdgeRater, I can calculate on the Wilshire 500 or anything else. So I'm not sure that these are as meaningful, but they mean something to me to be careful. There is none on the NASDAQ, mostly because of an absence of new lows. Now, market tone, despite some of my concerns, is still mostly yellow, cautious with a little bit of green. So cautious, bullish. If I look at the week, not a good week for me. I hope you did better than I did. We can see if you cut off the tail, because there are very few stocks below here, and you cut off the head because there's very few stocks above here, I guess it trends positive on the week, but it still was a tough week. You look at good earnings per share rank was associated with a better performance, yet high relative strength was not associated with a good performance. I thought it was a tough week. The S&P was down, at least the way it's calculated here, 0.33%. This is from it's end of day Friday to end of day Friday. And you can see it's down a tad. If you look in green at my main list, the stocks that I own going in, as I said, I had a bad week, 2.78% to the downside. Interestingly, the stocks I picked for shorting candidates, 7 were down, and the group as a return, if I had shorted them, I shorted some of them, were down 5%. That won't calculate in my when I look at the portfolio, it doesn't look at which are long and which are short. So in this case, this number may not be fully accurate. The buy candidates were down 1.5, and the ones I filter even more were up just a few pennies. If I look at the IBD things, IBD 50, Mike Scott's Focus 3, which is a great list, outperformed my holdings a bit, and the weekend review and Market Smith were a little bit above the market. And the RS line blue dot, even though more stocks were negative than positive, was actually up 2%. So not a great week for growth, not a great week for me. Now, what's interesting, if you look at the sectors here, mostly green, maybe 50-50. So the S&P 500 looks pretty strong. And this is on Friday's data, still with green. But if I look at the S&P 1500, and I break them into their major sectors, and I look at Friday's data, 82% of sectors were negative, 71% of industry groups were negative, and 60% of stocks were negative. That's not exactly a bullish day. In fact, Friday and Thursday were weak days. Now on the week, it started off with a bang with some new highs. You can see on the week, most of the sectors were up. I think it was 9 out of 11 were positive, maybe 10 out of 11 rather, I'm sorry. And 75% and 65% of industry groups and stocks. Going out a full month, it's been 50-50. So if you felt like it's up, down, up, down, up, down, up, down, you've been feeling the same thing as me. If we look lower right-hand corner, you could see on Friday it was 2 up and 9 down for a one-day move, so mostly red. But over 5 days, it was 10 out of 11 were positive. This is the buckets done in real time. Here's my 60-40 split. And again, you have the majority of the stocks are sitting here, so still a very bullish picture. I have a challenge with how that makes sense, or is it about to change as we're seeing a higher percent of stocks that are negative? I think that's a shot across the bow. Now, if I look at the industry group rotation, and these, or should be sectors, these are the top sectors on Friday. And you could see 1, 2, 5, 10, 1 month performance. That IT has been good for going back for 4 months. Healthcare has been mostly good, although earlier in the week it had a couple of tougher days. And industrials have really been relatively stable in the top half as well. What lagged this week was energy, utilities, and financials. And when I did my bottoms up review, looking at stocks that made my bullish list, there weren't a lot of those three. Now, I decided I'd look deeper at the top 3 groups. And these are the industry groups in the top 3 groups. And I ranked them. Semiconductors, equipment and semiconductors are 2 of the top, at least in those groups, top 4. We have 147 altogether, so it's 4th. There's a 55, 45, and a 44 before it. But I looked at semiconductors, agriculture and farm machinery, and healthcare supply, the 4 things above 140 in the top 3 sectors. I got a list of stocks, which you can't see. And then I really like this one here on the top, which is HGSI. And what I liked about it was an uptrend, a pullback, and a reversal on the weekly off of trend line, and then a break out of a trend line on the daily. So I like to do a top-down analysis during the day. Don't have to wait for the market to close. And this is one of the Q tools. It's amazing. It's not a full feature program. You need to have a data set. It doesn't have charting. So it doesn't really compete with HGSI, but it's a nice second option to have. Canaries in the coal mine, this surprised me. But I guess even though Amazon got hurt, the generals did okay. Google is probably the best of them. Um, Here's the stocks that I have in my canaries. It's Ian's canaries. It goes back to 2013, I believe, when Ian put it together. And I talked about last couple weeks ago, we broke above the descending trend line. We've kind of gone sideways. We were actually up 1.5% despite Amazon on the canaries. Mobile breakout from a squeeze to the PSI reversal and a kahuna. Much more bullish on these than bearish. So is this where the money is going, and is the rest of the market in trouble? Now, I've been introducing you to some of these charts over the past couple of weeks, and let me tell you that they all have one thing in common. In a strong market, this line goes up. When it goes sideways or pulls back, that's not good for a strong market. Stocks versus bonds, off the March low and going on until recently, stocks outperforming bonds starting in May. Bonds are outperforming stocks and actually broke down below its moving average. That's bearish. The SPY versus the equal weight. During a bull market, the SPY, those leaders, the big cap leaders, lead us off the bottom. And when they start to roll over, then the equal weight index takes charge. And that's something that looks like it might be happening now. Not great music for the permabulls. Up here, S&P 100 versus the S&P 1000. Again, in a bull market, you have this going up. As this rolls over, this has to make you concerned that there's trouble coming for the market. And lastly, for those like me that are Bill O'Neill fans, subscribers to MarketSmith, IBD, listen to IBD Live, you have to be a little nervous when you do a ratio of the Innovator IBD 50 ETF. And this is something that is actively managed to mimic the weekly performance of the IBD 50. And I compared it to the Wilshire 4500, which is a big index. And when this is just going down, what does that tell you about your growth stock portfolio? Know your news and earnings. No week is easy on the news when you have your monthly unemployment, what John Person lovingly refers to as the monthly unenjoyment report, and a smattering of other things that may matter, ADP, PMIs, a lot of different data sets as this week goes on. And then not to forget, it's a judgment call to hold stocks over earnings. It's bad judgment to not know when your stock's earnings date is scheduled. I say that all the time. Now, some of the good looking stocks, NXP Semiconductors, their earnings are after the close Monday. I won't be buying that one, although I like the chart. You got some energy here. You got some solar, SunPower here, CVS. You got Roku, Uber, Etsy, three stocks that have been, Roku and Etsy at least have been winners in the COVID economy. Is Etsy, I put Etsy on my look short before I buy list. And we'll see, I went short until the earnings come out, of course. You got Wynn, masks are back. Are we going to shut down Vegas? Doubtful. A stock that I've been short a little while on, made some money. Wayfair I'll have to cover on Thursday. And God, look at the market cap on Moderna. These guys, in my mind, to justify their market cap, they need to cure cancer. I know that there's a lot of promise coming from them on their vaccine. And God bless them. If you own IBB or Labu, you probably have a fair amount of Moderna. It is a monster. But boy, its market cap defies reality. All right. So up here it just tells you that the market was down this week, except for the Russell, that the big cap earnings disappointed, and they represent 22% of the market cap of the S&P 500. When they're good, they're enough perhaps to keep the market up. If they roll over, that will hurt the market. We had mixed economic news, new home sales, durable goods, and the advanced estimate for GDP each missed, although missing GDP probably is good because it makes the Fed feel good about waiting. Consumer confidence was better, personal income and spending was better than expected, and then the PCE price inflation data, which the Fed watches closely, was not as bad as hot as expected. Fed, I was looking for a graphic of the Fed holding up a ship and then showing arrows of bad news. The Fed continues to hold up the market, and Powell did not blow it this time. Sometimes the market sells off when he speaks, and he reassured the market that tapering and rate increases are further out. News flow will still dominate even beyond earnings as we learn more about the Delta variant. Infections in vaccinated as well as unvaccinated populations, mixed numbers on the economic front. As I said, I took some heat. I had a position in DQ and BABA, and both got clobbered. I read the news on China. I know friends don't like to invest in China. I get it. I bought both of these on the low, but I still took some heat on them. Amazon dropping 7.6%. Wowzer. As I said on the previous slide, lots of earnings this week. I wouldn't be surprised to see some snapback, especially on Amazon. But this is a weak seasonal time. Further sell-off, probably not going to be a surprise. And I'm going to wait for Monday and see what's going on before I commit fresh capital. So bullish with concern. And you look at the numbers right here. And, I'm not a statistician. I don't have every data point in my mind. But if the year ended right now, I'd be up a multiple of the S&P 500. That's a damn good year. So this has been a climb a wall worry because we've climbed up nicely. All right. So that's my thoughts on the market. Very quickly, I usually look at TradeStation just to get a sense. I want to look here first. And, as bearish as I may feel, or not bearish, as concerned as I am about the market, as concerned as you may hear a lot of pundits be, I just want to point out that the S&P 500, nice uptrend, and multiple support lines underneath. NASDAQ, or the Qs, nice move with some pullbacks, multiple support lines. The diamonds, multiple bullish support. The one that's most bothersome is the Russell, and they had a good week last week. So even if I'm short-term bearish, I said before when I looked at the indexes, it's really hard to be that bearish when you look at the state of the current markets. Are we slowing down up here, and are we going to get some modest corrections back to these trend lines? Well, we've done it multiple times before. I'm sure we're going to do it again. Short-term pain. All right, very quickly, E-minis. So when I look here, what do I see? I see we're still in a person buy on the E-minis, daily, weekly, and monthly. Well, that's kind of bullish. I see a blue candle, which is neutral. When it's green, I should be buying or holding. When it's red, I should be shorting or holding, not buying. When it's blue, I can do whatever I want. So blue, blue, green on the monthly. We're in an uptrend. We're certainly pausing here. When I look below, the weekly bongo, which is the center section of dots, is still green. The high jump came down, no issue there. I look at this and I see more bullish than bearish. Dow futures. Buy, 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 blue. Notice that the Dow, which has been going sideways more, has not flipped its weekly bongo to red. But again, I'd still have to say, in a buy signal, more bullish than bearish. Russell. This one looks different. This one reversed off the bottom of the envelope, green in a buy, but weekly it's in a sell, monthly it's in a buy. So short-term weakness, intermediate-term weakness. This is the one that's going sideways and chopping and has been in a weekly bullish sell for quite some time. This is what I'm least excited by, although it had a nice bounce off the bottom. And then the NASDAQ futures pull back from the envelope, blue, but it's in a buy signal for 3 time frames. It's got some MACD divergence, which may come to play. The weekly bond goes still green. I look at all this and do I expect the mother of all bear markets to happen on Monday? No, I don't. In fact, if I had to bet, I would probably bet the market ends higher on the week than it starts. I just have this foreboding sense. I mean, clearly the market's closer to a top than it is to a bottom, and someday the market's going to reverse, and I don't know when. All right, so if we look at Major Market Plus, and I look at top-down view, that's what I want here is go to a top-down view. Bring up what's been working. Bitcoin, treasury bonds, mid caps, oil, small caps, biotech. So this is a mixed picture this week for growth stocks, and some of the small stocks did okay. On the bottom, ARK, FANG, ARK, 50, ARK, SP 100. So there were clear challenges this week on the growth front. Let me make this a little bit bigger. Here's that S&P, and all I want to show you is you could argue that this thing is pausing up here and slowing down. These pullbacks to the 50 have occurred a lot, and we're overdue. And if somebody asked me, Ian used to talk about a 3-road scenario. Well, the high road is simple. The high road is we just continue on to all-time higher highs. The low road is we'll probably break down and test that 200, and trust me, that would be your 10% correction, and that would be painful. And the middle road would be a test of that 50 and go back up. I think that we're going to revisit the 50. I just don't know if this is the time. So all I can say is bullish looking, but looks like the ascent is slowing down, and there is some risk there. If I look at the Dow Jones Industrial Average, again, it has gone nowhere for months. Sideways move. It's going to resolve one way or the other. Now, interestingly, its relative strength has actually improved going sideways, and that would suggest a resolution to the upside, which, if I had to bet, is probably more likely. I'm confusing the hell out of me too. I am bullish. I think that we end up higher. I just think we got a correction, 3 to 5% correction, and August is the time to have it. Here is the NASDAQ futures, also stalling at all-time highs, or NASDAQ cash, not futures. And then the Russell ETF IWM, ultimately a sideways move going on since February. If I look at the biotech, remember, big position of Moderna and biotech ETFs. This ETF's been on a move since May and continues to have a nice run. Semiconductors woke up this week. My God, they're the top groups out there. So semiconductors broke out on Thursday and Friday. SMH looks like a Bible interest. Is that what this is? This is the SOX index. But it looks like this one's ready to break out. If I look at the 50, it won't look as good. 50 is clearly in a downtrend. Now, is it going to break out before too long? It probably will. And you're right up there failing at the top of that downtrend right now. Certainly not the most bullish looking of the patterns. FANGs, this is the real FANGs, not my broader list. Broke out sideways, stayed above its chandelier stop. I'm still bullish on the big guys compared to the smaller guys. And then what else can I look at? I'm not a Bitcoin guy, but a lot of people request it. And Bitcoin is just sort of sitting on their 200. What was support? What was support often turns into resistance. We'll see if we can break above and stay. If we look at the dollar, I know it's there. UUP. Pullback, sort of a bounce on Friday with a kahuna. We'll see if that holds. If the dollar is strong, what do you think it's going to show you about gold and silver? If you look at the gold spider, yeah, I believe gold is going to run too. I just will let it run before I'm chasing. Right now we're below the 200 and the 50. If I look at silver, I'm below the 200 and the 50. Hard for me to get excited. Yes, I might be buying gold miners, not the metal. So I could go up here and find the Vector Gold Miner ETF and say that maybe it looks a little bit better. There's a little bit of jump this week. It's still got to get above its moving averages and its chandelier stop. All right. So again, if you had to hold me to bullish or bearish, I think this market's still going higher. I just think at some point there's going to be a pause to refresh with all the news flow that's going on. And as I pointed a few moments ago, August is not the strongest month in the market. Next thing I like to look at is number 7 here, industries. If I hit warehouse, this will change. And it shows me I've got 174 different industries. People want to know what is the true power of HGSI. This is, to me, the true power. I'm going to rank these things by force. I have 40-some stocks, 45 it looks like, momentum to the upside, and I have 37 to the downside. That's a mixed number. It sounds like my feelings of the market, but since I think that there's a chance the market's going to be higher, I'm going to look at the long, although I did find a number of potential shorts on my review this week. If I look at 5-day down to see out a little bit more intermediate term, I see, looks like 34. And if I go up to the top, 50 something. So more bullish than bearish when I look at that breakdown in momentum. But again, we're sort of treading water and going sideways. So let's go 2-day momentum up. This is how I do top down with HGSI. Make sure I'm ranked on raw combo, which I am. Right click, highlight, then right click, change index group. And then the stocks above the index group I'm going to look at. Tesla, I can't believe I'm going to say this. Tesla looks like a buy here. I mean, I'm not a Teslonian. I had a car. I liked it. In some ways, I didn't like it in others. The resale was horrible. I don't have it anymore. I'm waiting to buy a Lucid. See if that's any nicer. If you look at Tesla, it's got great earnings per share growth. Its multiple is high, but it's going to come down if it makes those earnings. It has pulled back since January. It's been going sideways here. It had a move up on Friday. It took out its PSER dot and its chandelier stop. A new John Person buy on Thursday and Friday. Mobile breakout from a squeeze on Thursday and a kahuna. God, I can't believe I'm saying it. I'd rather be buying than selling Tesla. Now, what I like about this setup is even though these are big numbers separating, I would not let the stock get much below the low of the prior day. And I'd have as tight a stop as I can. Risk getting stopped out, but if this thing turns around, it could still drop against you hard. Excuse me, get tired. I like Tesla. Wait. NEO, I actually own some of this sitting right on the 50. I like to see it show that China's not pulling it down too. I probably wouldn't be adding to it right now. I don't usually look beneath the index. Next one down is semiconductors. I told you it was one of the top industry groups. Wowzer, AMD broke out this week. Um, yeah, that was the time to buy it on Wednesday. I'm not sure I'd be chasing it now. It's up at the high jump bar. Look at the clean break on the weekly. The fundamentals are actually very strong. Look at the earnings per share growth versus the multiple, lots of demand. I couldn't fault you for buying it here, but my concern is it's already had a big run and the risk is certainly elevated. Qualcomm looks like it wants to run as well. Had a Bible gap up 2 days ago. Silicon Motion, Bible gap up. Xilinx broke out. What does this tell you about semiconductors? Power integration, Bible gap up. Great fundamentals. Multiple kahunas, told you it was coming. I like that one. Micron hasn't done anything yet. There's the index. All right. Back. Medical equipment. Allied Healthcare is a skinny stock that's too volatile for my taste. Dexcom, I have Tandem. I guess they're in the same basic world of diabetes management. These stocks are starting to make some good money. Bible gap up. In my opinion, it's gone too far. Probably wouldn't be chasing it. Align Technology, wow, breakout, all-time highs. So the point of doing a top-down analysis is you're cutting the market down to size and you're looking at the top stocks in the top industry groups. Renewable energy, Enphase, pulled back and broke out. I thought this was Chinese too. I guess maybe it's not. This one held up to the Chinese pullback, probably benefits if China takes things out of the market. But I think Enphase still looks great, great earnings per share growth. First Solar has earnings this week. Well, maybe it doesn't. Here it suggests the earnings are out. I thought I saw it. Let me go back. Oh, that was SunPower. So this is buying on support, a mobile breakout, John Person buy, pocket pivots in a weekly bongo. This looks interesting. First Solar. Then we get the index. Yeah, the one that messed me up, one of my losses this week. This thing ran up and then the China news came out and it bottomed. I'm still going to watch it, look at the earnings per share growth here versus the multiple stock under demand. So I go down to the index on each of them, semiconductor, manufacturing, KLA Tencor, Bible gap up. If anybody believes there's no strength in the market, just look at semis and semi-manufacturing. Love this chart. Big uptrend. Here's the weekly sideways move and breaking out. Applied Materials, good earnings per share growth compared to earnings. That's on my buy watch, as are many of these. Lam Research, if it wasn't a $600 stock, would be on my buy watch. Here's an inexpensive, comparatively, United Microelectronics Corp. Sideways move and breaking out with the rest of the group. Do your research. I don't know anything about the company. I like the chart. Taiwan Semi tightening up, as is Teradyne. A lot to like in semis and semi-manufacturing. Communication. Nokia, cheap stock, meme stock. That doesn't mean it can't go up. I just don't follow it. I probably wouldn't look at it. Cisco, nice steady eddy, sideways move, breaking out. Old name, not a lot of earnings per share growth, but one that's certainly been behaving well. Did like the Juniper pattern. Another old name, kind of loosey-goosey, but it's tightened up here on the 50. Mobile breakout from a squeeze. John Person buy 2 kahunas in a row. And this is on my buy watch list. Let's look at this tail on the weekly. 7, advertising and marketing. Marin Software, small stock, maybe bouncing here. Don't know enough about it. This is, I wonder if this is a meme play. Look at the accumulation. I don't know. It's probably worth a play. Give it, buy 100 shares, 1,000 shares. Not a lot of money, but it looks to me like a market manipulation stock. Interpublic. So I usually will go through the top 10 groups. Precious metal mining. Kirkland, let's look at a couple of these. Looks much better than the ETF doesn't. Breaking out. Relative strength improving. Mobile breakout from a squeeze. Weekly bond yield turned green. Kirkland looks interesting. Here's Barrick struggling below the moving average. This is AEM. Newmont. Kinross. And then Franco-Nevada is another one that looks interesting. Again, it's above its moving averages, already broken out. It's got some earnings per share growth. This is a very expensive gold miner. Home builders really turned it around this week. All right. Look at a couple of them. Meritage has broken out. Bible gap up earlier in the week on earnings. And then DR Horton rather, very Bible, I think, down here. Kahuna's mobile breakouts from a squeeze, breaking out above its moving averages on both the daily and the weekly. Lennar, I don't like the shooting star on Friday. And then the last one of this group, number 10, investment things. Riot Blockchain, on one hand, looks interesting. There's a resistance line that comes across here. It's going to go wherever Bitcoin goes. You have to know that. I've made a lot of money on it, and then I've had some challenges on it. Eris, too far gone. AXA Equitable, asset management. I think they have insurance products. Pays a little dividend. It's got some interesting earnings per share growth. I don't know if it's an IPO or what, or it changed its designation, but pulled back to the support, broke above the 50. It looks kind of interesting right there if I had to pick buy or sell. Janus Henderson, not my kind of stock. All right, so I went through 10. I do that daily. I look at shorts daily. I go through a bottoms up analysis on the weekend where I look at over 1,000 charts. Let me show you which was the culmination of my top and bottom down analysis. No, I'm not going to post a text file. Then it will look like I'm giving investment advice. I'm showing you how to use some tools here. All right, so these are stocks that made it to my buy watch list. Notice the agricultural machinery. So you've got, this is an interesting, here's the stock that I liked on Q. AGCO pays a 3.5% dividend. It's got good earnings per share growth compared to the multiple. Strong uptrend, pullback, reversal on the weekly. Mobile breakout from a squeeze. John Person, pocket pivots, and kahunas. AGCO is one I'm going to look at hard. Here's CNH Industries, similar pattern. John Deere bouncing off the moving averages with momentum signals. Titan Industries, another one, big run up, pull back to the 200. Then with a number of kahunas has bounced, took out the 50. I think there's a number in this group that are attractive. Application software, you'll see a number of those. I mentioned Tesla, which I can't believe I'm mentioning it. A lot of different stories here. On the technology play, I mentioned I liked NXP, but as you can see here, earnings are on the 2nd, which is Monday. This looks great. You know, I don't believe in playing these before earnings. You've got no cushion, but if I had to bet it's going higher. Now I might I say bad things when I feel them. I should be fair and say good things. I believe that Eric Hay has gotten more interested in his seasonality program, which I continue to own, even though I was getting very pissed at it because all these links were broken. But it seems to be working now. So I would ask myself, I know seasonality as a whole is not great right now, but if I look at NXPI and I'm looking at quarterly earnings, so it's in an uptrend, but it's going into a seasonally weak period of time. So I don't see anything that compels me to go and play an earnings call on NXPI. Let's put this back here. A lecture or discussion for another time. Love the chart pattern. Let's let it get through earnings. On semiconductor, look at the weekly pullback, breaking out. All those kahunas and pocket pivots. Grow generation, I like this as a marijuana play. It's more of like a Home Depot for gardening and growing things. It's just got to do something. Right now it's kind of going a lot of sideways. So on that note, I've shared the stocks that I find interesting this week. On the healthcare, Verisite looked interesting. I like to be above the 200, but I've got a number of kahunas taken off of the moving averages, broke above its chandelier stop, and coming out of a squeeze. So let me just summarize my thoughts for this week. And my God, I got this done in less than an hour. The market has had an amazing run off the March lows. It experiences almost routinely mild corrections back to the 50-day moving average, at least in the NASDAQ, S&P. The Dow is going sideways and the Russell sideways as well. If you had to ask me, do I think 12 months from now, 6 months from now, or even 4 months from now, is the market going to be higher or lower? My feeling is the market's going to be higher. I also think that there's so many shots across the bow, whether it's bad earnings on some of the generals, whether it's COVID, whether it's the masks, whether it's the expiration of the evictions, whether it's, you name them, more earnings to come. I do think that will correct. And I think if we're going to correct, we're going to correct in August. So be aware that there's risk, but you got to play the market we have, and the market we have right now is going higher. So I think, therefore, I am a little bit concerned, and that's why I have more cash, more shorts, and smaller positions. And let's see where we go. Have a great week, everybody. Remember, this is education alone. I don't know anything more than you do. I can't predict the future any better than the guy does across the street. I just look at the charts, and that's what I hear. Have a great week, and hopefully we'll do it again next week. Bye, everybody.